Key of Forex Trading. In this video, I will tell you the key Forex trading terms to take away. Base currency. This is the first currency that appears when quoting a currency pair. Looking at euro or US dollar, the euro is the base currency. Quote, currency. This is the second currency in the quoted currency pair and is the US dollar in the euro or US dollar example. Bid. The bid price is the highest price that a buyer is prepared to pay. When you are looking to sell a Forex pair, this is the price you will see, usually to the left of the quote, and is often in red. Ask. This is the opposite of the bid and represents the lowest price a seller is willing to accept. When you are looking to buy a currency pair, this is the price you will see, and is usually to the right and in blue. Spread. This is the difference between the bid and the ask price, which represents the actual spread in the underlying Forex market plus the additional spread added by the broker. Pips. A pip or point refers to a one-digit move in the fourth decimal place. This is often how traders refer to movements in a currency pair. Leverage. Leverage allows traders to trade positions while only putting up a fraction of the full value of the trade. This allows traders to control larger positions with a small amount of capital. Leverage amplifies gains and losses. Margin. This is the amount of money needed to open a leveraged position and is the difference between the full value of your position and the funds being lent to you by the broker. Margin call. When the total capital deposited plus or minus any profits or losses dips below a specified level. Liquidity. A currency pair is considered to be liquid if it can easily be bought and sold due to there being many participants trading the currency pair. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.